Well, a very good evening and thanks for joining us on India Business Hour. I'm Ashmit Kumar and Ritu Singh will be joining us from the Mumbai studios. With that, let's head into the top story this evening. Disturbing developments coming in from J&K. 42 CRPF personnel have been killed in an improvised explosive device or an IED blast in Pulwama district of Jammu and Kashmir. Now, the IED blast was planted in a car which rammed into a convoy of CRPF Jawans on the highway. Terrorist outfit Jaish-e-Mohammed has claimed responsibility for the attack. Mufti Islah, who was on the site of the blast, has filed this report.
It's been almost 6 hours since that explosion took place, barely 100 meters away from this place where I'm standing. CRPF bus really taking a massive brunt of that IED blast. Actually, we've seen that after some 30 years, a suicide bomber actually in his car ramming into a CRPF vehicle that resulted in such a massive casualty as far as CRPF goes. Some 30 CRPF men getting killed and around 10 to 12 being injured. Now the injured have been taken to 92 base hospital in Srinagar and they're being treated out there. Actually, a few of them are stated to be critical. That said, the Jaish-e-Mohammed militant outfit which had been carrying out spate of grenade attacks in Srinagar and elsewhere, claiming responsibility. In fact, just saying that its militant Adil Ahmed, who actually belongs to Pulwama, was behind this suicide attack, and actually he also died in this attack. The suicide bomber releasing a video before he rammed that vehicle into the CRPF bus. In that video, he's clearly saying that jihad is going to take place, and in the days to come, security forces will see more of these attacks. But clearly one sees a different kind of a pattern. While IEDs were used some 5 to 10 years back, they kind of staging a comeback. We've seen in the last couple of years, mostly it is AK fire as well as grenades which have been used by militants. But it seems that there is a change of tactic now. Militants now, with this attack, really starting to use heavy explosives. One estimate suggesting that this car, which was laden with some 350 kgs of explosive, ramming into that vehicle, which led to such a massive number of casualties. In fact, people here telling us that the blast had a massive impact. It was heard 8 kilometers from this particular spot, and as we arrived here, we did see actually bodies and limbs lying around. The steel body of that vehicle was lying some 50 to 60 meters away. That kind of gives you a sense of the impact that militants had been using with this IED that they use today. In Srinagar, this is Mufti Islah.
All right, that was Mufti Islah reporting from the site of the blast. Prime Minister Modi and several other politicians have also condemned this attack on the CRPF personnel. PM Modi tweeted, and I quote, "Attack on CRPF personnel in Pulwama is despicable. I strongly condemn this dastardly attack. The sacrifices of our brave security personnel shall not go in vain. The entire nation stands shoulder to shoulder with the families of the brave martyrs. May the injured recover quickly." End of quote. Congress President Rahul Gandhi also took to Twitter. He tweeted, and I quote again, "I'm deeply disturbed by the cowardly attack on a CRPF convoy in Jammu and Kashmir, in which many of our brave CRPF men have been martyred and a large number wounded, some critically. My condolences to the families of our martyrs. I pray for the speedy recovery of the injured." End of quote. Home Minister Rajnath Singh, former Jammu and Kashmir Chief Minister Umar Abdullah have also conveyed their condemnation on Twitter. On that note, listen in to the Minister of State for Prime Minister's Office, Jitendra Singh, and MOS Home Affairs Hansraj Ahir, as well as former J&K Chief Minister Mehbooba Mufti, talking on this issue.
Deep conspiracy hatched across the border. So this is a sponsored terrorism. As I've been saying, this is, and unfortunately, it has developed a vested interest even within India.
So Pakistan, you are blaming for today's attack?
I am blaming Pakistan-sponsored agencies, whether it be Lakshya-e-Toba, but at the same time, I am also blaming those whom you are feeling shy to blame. The elements within India, within Kashmir, who have developed a vested interest in the continuation of this militant. Politicians, ministers, tending to be apologetic about terrorism.
कश्मीर क्षेत्र में पुलवामा में जो ब्लास्ट हुआ है और आईडी ब्लास्ट में हमारे देश के हमारे वीर जवान शहीद हुए हैं। इन सीआरपीएफ के जवानों की बड़ी बहादुरी साथ में वो वहाँ पर आतंकियों से लड़ रहे हैं और ये जानकर ही इस तरीके का डरपोक हमला किया गया है। और इस आईडी ब्लास्ट में हमारे जवानों को जो शहादत मिली है, ये देश का हर नागरिक इसको भूलेगा नहीं। देश के लिए उन्होंने अपना बलिदान दिया है, लेकिन इतना कहकर भी हम सरकार खामोश बैठने वाली नहीं है। ये बहुत दुखद है, हम लोगों को चैलेंज के रूप में हम इसको देखते हैं और इस घटना का हिसाब चुकता होगा।
बहुत ही बुरा अटैक रहा है ये, और इसको अल्फाज नहीं है मेरे पास टू कंडेम इट। देखिए, सर्जिकल स्ट्राइक्स और बॉर्डर्स पे कन्फ्रंट्रेशन से हमें कुछ नहीं मिल रहा है, बल्कि हमारे जवान जो हैं इस तरह से शहीद किए जा रहे हैं। यहाँ भी कश्मीर में रोज़ कोई ना कोई लोग मरते रहते हैं। तो इस सब खून खराबे को बंद करने के लिए मेरा ये मानना है कि तमाम जो पॉलिटिकल पार्टीज़ को उनको इकट्ठा होना चाहिए, एनडीए गवर्नमेंट के साथ मिलकर कोई इसमें कोई रास्ता निकालना चाहिए ताकि ये खून खराबा हमेशा के लिए बंद हो जाए।
That's a tragic development that the Cabinet Committee, we understand, on security will be meeting tomorrow morning at about 9:15 a.m, most likely to decide on the further course of action after today's terror attack. Well, with that, let's shift focus now onto some corporate action. The biggest corporate story that we're tracking this evening, lenders have proposed to take charge of Jet Airways cockpit. Now, Jet Airways held a crucial board meeting in Mumbai today to discuss ways to resuscitate the ailing airline. Now, this as it reported a fourth straight quarter of losses. The board has approved the bank-led provisional resolution plan. Lenders have proposed to convert their debt into 11.4 crore shares of 10 rupees each at a conversion rate of 1 rupee. This will give them a majority stake in the company. Ritu Singh, who has been tracking that story. Ritu, you've been taking this story forward. We understand that the lenders are keen on getting into the cockpit, as you've put that. What else are you picking up?
Almost 2 months after Jet Airways defaulted on its repayment to lenders on the 31st of December, the board has now approved what it calls the bank-led provisional resolution plan, under which they have identified a funding gap which is required now of 8,500 crore rupees, which includes a proposed debt repayment of 1,700 crore rupees to the domestic lenders of Jet Airways. Now, what does this plan entail? It's 3 parts really. The first will be equity infusion from the promoters, some credit from the lenders as well, debt restructuring under which a portion of the debt will be converted into equity, and the sale of aircraft or leaseback, or in short, asset monetization, which will also be part of this turnaround plan. Now, this entire plan will be implemented under the guidance of a monitoring agency which will be externally appointed. Further, under this plan, lenders will convert debt into equity, under which they will convert 11.4 crore shares of Jet Airways, after which the SBI-led consortium will become the largest shareholder in Jet Airways. Now, this will be done at a price of ₹1 each for each share, with a face value of 10 rupees, which will then mean that SBI-led consortium will actually have 51% stake. Further, as part of this turnaround plan, the board proposes to empower lenders to be able to appoint directors on the board of Jet Airways, and further, they're also in talks with the domestic lenders to extend some interim credit facility to them, but the terms of that are yet to be decided. Now, what happens at the end of this turnaround plan once it is approved by the lenders in their EGM on the 21st of February? The shareholding pattern will change this way, where the lenders will have 51% or majority control of Jet Airways. Naresh Goyal, who is currently the promoter, his stake will almost halve to 25.5%, and Etihad will also see its 24% stake falling to 12%. So overall, lenders will largely be in control, and the next step would be, what the lenders do with that 50% stake. But this is, of course, the draft plan. The final plan will have to be approved by SEBI, RBI, as well as the shareholders of Jet Airways.
Ritu, thanks a lot for that. In fact, let's stay with that story. Lata Venkatesh is also joining us. Lata, what else are you picking up? Will a new promoter perhaps be brought in? Is that the way forward?
Well, at the moment, bankers say that they're not thinking in terms of a new promoter, that they will continue to monitor the performance by being board members. And so in the new reconstituted board, the lenders will have a majority. The expectation is, for the moment, the company will be run by a professional management, not a management of Naresh Goyal, not a management of Etihad, but a management that is professional and which will be under the supervision of an international agency. The expectation is that lenders will agree, because this is the first time that they are going to use the inter-creditor agreement that Finance Minister Piyush Goyal had mooted under the Sashakt plan. So that will require only 66% of the lenders to agree. If that is done, then hopefully this will go ahead. The expectation is that this 8,500 crore funding gap will partly be funded by equity funds coming from Etihad and Naresh Goyal as well, and more funds coming in from the lenders. So the lenders could participate even by way of equity, we do not know, and at what price, because they do want to retain a majority. Also, Naresh Goyal will have to give his securities in pledge. The lenders will not put in more money unless they get securities as collateral. So effectively, it will mean they have 76% control, because they will also have the 25.5% control of Naresh Goyal's shares, or at least part of it. And therefore, they will be able to perhaps make decisions. At the moment, banking sources told me that they are not looking at some private equity or the Tatas or any other participation. They believe Etihad is a well-run airline, and that its expertise will be available to them. So it doesn't look like at the moment there are too many plans of other investors coming in. The idea is that these three entities, groups of shareholders, lenders, Naresh Goyal and Etihad, will continue to call the shots, with lenders, of course, having a giant share of the decision-making.
All right, so no new promoters going to be brought in right away. That's what Lata is reporting. Thank you very much for joining in with your take, Lata. Now on to a story from the Deal Street then. Sources say that the top brass of Zee Entertainment is in the United States to meet potential investors. And media giants Comcast and Sony may be in the race to invest in this company. Nimesh Shah broke that story and joins in with the details. Nimesh, fill us in.
This is what I've picked up from sources, that the top management, including Subhash Chandra, Himanshu Modi and Puneet Goenka, they all three have left for US last night. And today is a key day, is what I understand, that they're going to discuss with potential buyers for a possible promoter stake in Zee Entertainment. So as things stand, what I understand from sources, there are two players in the race. One is Comcast of US, which is the second largest conglomerate in the US, which has telecom and media exposure, and the other name is Sony. If you remember, Nisha had broken the story about Sony in the race some time back. So to what I understand now, these are the two names which are in the race for a substantial stake into Zee Entertainment, largely from the promoters, is what they're going to buy from, and that probably can get announced in the next few days from now on. Both the bids, what I understand from sources, are in the range of 540 to 560 rupees per share, and possibly before the end of this week, the promoters may get into a binding agreement, with at least one of the bidders, for a deal to conclude in the next few weeks from now on. But as things stand, the top management are in the US right now, engaging with one of the potential buyers. And the two names, what as I said earlier, is Comcast and Sony. And within that, with one of the bidders, they are likely to strike or at least do a binding bid before the end of this week.
All right, thank you for joining in. Nimesh Shah reporting on a mega deal in the works. Now, the government has claimed it is well on its way to meet the 80,000 crore rupee divestment target for this financial year. Today, the Bharat 22 ETF was oversubscribed more than 10 times, and the centre stands to garner 10,000 crore rupees. With this, the centre is hopeful of meeting the target. Sapna Das is here with more details. Sapna, the ETF is a success, and the 80,000 crore rupee target seems well within sight.
Well, if you look at the ETF story in FY19 itself, it has been a bit of a runaway success. So, number one, of course, the latest tranche of the Bharat 22 offering was on tap mechanism. So, 40,000 crores of subscriptions have come in. This is well over 10 times of the base offering of 3,500 crores. 10,000 crores is what the government has decided to retain. They have not been able to do more than that, I suppose, simply because then the government shareholding in those stocks would have fallen below 52%, and that's the regulation. The government stakeholding cannot come below that level. So 10,000 crores is what you're looking at. And very quickly, if you look at the 80,000 crores for FY19, clearly 37,000 crores, 37,300 crores to be precise, has come in only through ETFs. So you had the first tranche of Bharat 22 sometime last year. Around 17,000 crores came in then. Then you had another 8,300 crores coming in through the CPSE ETF. Then again, with the latest tranche of Bharat 22, another 10,000 crores has come in. Close to 50% of your FY19 disinvestment target is being met by ETFs, and that is a very big indication of the kind of success which these ETFs have met with. There are lots of reasons behind it. A quick, small point that I would also like to mention is that probably in the latest tranche of the Bharat 22 ETF, even LIC subscription has been very much on the lower side. So it has been very well diversified. The response has been very good. Very quickly on the target now, 55,000 crores is where the government stands as of now, particularly after Axis Bank OFS. 5,300 crores have come in there, 10,000 in the Bharat 22. So around more than 15,000 crores has already come in what, 3 days time span in this current week. Expectation is that they are well on that target. PFC REC now remain to be concluded in the month of March. Some more buybacks are also in progress, and probably some other things that the government will like to think about if required in meeting that gap of around 25,000 crores that we are talking about right now. But as of now, well on target to achieve 80,000 crores worth of divestment aim FY19.
Now, stay with us. It's been a busy day for you. You've also been tracking the updates on the tax revenue front. The government is weighing options to meet its revised tax revenue targets. Government officials tell CNBC TV18 that there may be a shortfall in CGST and corporate tax receipts. Sapna, what else are you picking up?
We have gathered from government officials that probably, there could be some shortfall in terms of even the revised estimates of corporate tax receipts as well as the CGST side. Now, the union budget, of course, has scaled down the CGST target by a massive 1 lakh crore. So the expectation has been that probably even, now that number may be more achievable. 5.03 lakh crores is what the government has spoken about. But some doubts again being raised even on that front, even now, as of now. On corporate taxes, well, the story there is very clear. That number has actually been increased by around 50,000 crores. And if you look at the direct tax story right now, the pace of growth of direct taxes is 13%. If you want to achieve this, revised estimate, you have to grow at the pace of 19.5%. So that's the variation that we're talking about as of now. So at this stage, probably both these targets are looking challenging. But probably post 15 March, we'll have a better sense as to how much could that shortfall be. But net, the government will be on course as far as the FD target of 3.4% is concerned for FY19. I think by now it's pretty much well known that the FD target is something the government is able to manage, quote unquote, almost every year, and that's how the story is going to turn out most probably towards the end of March this fiscal as well.
Well, good news on both fronts. Sapna Das, thank you very much for joining in with both of those stories. Now, here's a big CNBC TV18 exclusive then. Veteran banker Uday Kotak says the current financial situation is fragile, but it may not be a systemic problem if handled well. Speaking to Shireen Ban, Kotak added that the fear factor will remain until the balance sheets of companies become trustworthy. Listen in to what he had to make of the markets and the current liquidity situation.
One of the issues which came out in ILFS and maybe concerning markets post ILFS is what I call as interconnected exposures. Therefore, an exposure given by say an NBFC to a group real estate company or a real estate company, or some arrangements which may be between two companies which may be not necessarily at arm's length,
right,
or lending or investment in very illiquid situation with short-term funding. Some of those issues are what may be concerning markets right now.
Are more accidents waiting to happen? Is that your indication, your assessment?
I will put it this way, that the current situation is fragile. However, I do not see a systemic problem if well handled.
When you say you don't expect a systemic problem if well handled, when handled, on whose part?
I think certainly on the part of the policymakers and the regulators. but combined with responsible market behavior.
But what can the policymakers and the regulator do in this environment?
No, I think there are different ways of handling this. Number one, I do believe that with, for example, the inflation levels, CPI inflation levels yesterday, there is room for more reduction in short-term rates that can certainly help the system. And I think it's important to keep the liquidity pretty comfortable in the system through this period.
Is it not comfortable? Because we just heard from the RBI at the...
No, I'm saying, I think what we got to ensure that it continues in the month of March, which is an advanced tax and a busy month. So we need to maintain good liquidity, ensure that interest rates reflect CPI, which is certainly soft.
How much of it is a liquidity issue versus a fear factor?
No, I think there is a fear factor. There's a fear factor. Back to the point I said, there is an element of fragility in the Indian financial system today.
And in order, again, of priority, what would you say what are the biggest concerns when we talk about this fear factor? Of course, one is, what has happened post-Island FS, the fact that there might be more accidents waiting to happen and some of the other imbalances that you spoke of. But what is at the heart of this fear factor? What's causing the fear?
Shireen, it's a simple thing. The system needs to trust balance sheets. If you cannot trust balance sheets, there is a problem. And time has come for everybody to question that how trustworthy are Indian balance sheets. Until we get a good answer, good answer can come either from auditors or from the regulators. And without that trust, you will always have the fear factor.
So then, is there light at the end of the tunnel anytime soon?
So the system is making a difference. Wherever you trust balance sheets, the system is looking differently. Wherever you have concerns, the system is punishing disproportionately. Therefore, the price of uncertainty on the nature of the balance sheet is costing many companies.
So what will this then also mean as far as fund flows are concerned?
Fund flows are just
into
going
the Indian market.
Fund flows,
I mean, the flight to safety is what you've already spoken of.
And it's getting narrower, which is not necessarily a good thing from a long-term point of view. But I do believe that for us to be able to get the fund flow both from domestic and international investors is back to investors being minority investors to trust financials and true governance of companies in this country.
I want to address the NBFC issue systemically because there has been talk on a possibility of a review as far as the norms governing NBFCs are concerned. I don't know if any conversation has happened between you and the regulator or you and the government in the context of what we've seen happen with you supervising the IFS board. But what would the road ahead be, and is this the right time to do that?
We can discuss the timing, but just go back to a coincidence. 1997 was the Asian crisis. Indian NBFCs and the financial sector started having serious stress in 1998 all the way up to 2002, 2003. Similarly, we had the global financial crisis in 2008, and you saw the stress in the Indian system out of that in 2008. And exactly 10 years later, we are seeing some cracks which are coming into the system. So this is a 10-year syndrome, and we need to constantly move ahead, take corrective measures, because the system tends to get excesses, and that's what is happening. So 1998, 2008, 2018, 19.
In the context of this 10-year cycle, we're also now at the one-year anniversary of the RBI 12th February circular. How have you assessed the developments post that and where we stand today and where we could go from here on?
I am a believer in transparency, fundamentally, and let it be spoken. And true balance sheets need to be disclosed. If something is not true, we need to discuss and we need to see it transparently. The only issue about transparency is when you change a system or purge a system, there is, as I mentioned, significant frictional cost. So when you're moving towards a more transparent system, the only question you ask is, do you do it one shot or do you evolve into it? That is the matter of debate, not the end state, which is a transparent system. Therefore, should there be a period of evolution, or do you say one day this is the decision? Not the fact that we are in the right direction.
Speaking of direction, and you spoke of infrastructure and manufacturing as being bets that you would like to sort of focus on as we look at chasing growth in 2019. Outside of that, what are the other sectors that you believe, both in terms of valuations as well as growth outlook, look interesting?
I think financial sector, as I mentioned, since it is in a fragile zone, would see significant consolidation. Now, consolidation, some of it will happen through mortality as well. Therefore, I believe we are going to see fewer players going into the future than what we have seen in the past. It reminds me of 1998. There used to be 4,000 NBFCs. 5 years later, we were down to, out of those 4,000, serious functioning ones, barely 100. So we saw significant transformation in the NBFC sector.
You expect that kind of a shakeout?
I think the shakeout is going to be pretty significant. I'm not saying the intensity will be as much as it was in 98 because prudential regulations have moved significantly since then. But consolidation in the financial sector, the time has come. And one of the things I would really like to see with the new government is a long-term structural solution to public sector banking in this country.
Well, here's the big story from the Supreme Court then. The Chief Justice of India, Ranjan Gogoi, has sacked 2 court masters for tweaking the summon orders in Ericsson's contempt plea against Anil Ambani. Now, the order erroneously created an impression that Anil Ambani had been exempted from personal appearance at the court. Ashmit, you were following that story in the courts. Tell us about the charges against these court martyrs. It's quite shocking.
Indeed, very unusual developments these, Ritu, coming in from the Apex Court. What we understand is that the Chief Justice, acting on the administrative side, has sacked 2 staff members from the Court of Justice, Rohinton Nariman. Now, the reason for that essentially is that there is an alleged case of tampering with the orders of the highest court of the country. Extremely disturbing and shocking developments these coming in from the Apex Court. Now, the case in question is the Ericsson Anil Ambani matter. Now, as we understand, Ericsson had moved a contempt application against Anil Ambani. And on January 7th, when there was a hearing, Justice Rohinton Nariman, while hearing the matter, had issued a contempt notice against Anil Ambani. And as a part of that order, had clearly recorded that Anil Ambani's presence is required. He is required to be present in person at the date of the next hearing. Now, that was the order that was passed in the open court. It is then dictated to the court master, which is the staff, the additional registrars appointed to that particular court. They then reproduced that order on the website. Now, but when that order did finally get uploaded later that day on January 7th, it essentially said that the presence of the alleged contemner is dispensed with, giving the impression that Anil Ambani has been exempted from coming before the Apex Court, which was clearly not the case. Justice Nariman, just a few hours back, had given a entirely different order. Now, 3 days later, Ericsson counsels moved the Apex Court once again. They pointed out this anomaly, and finally on January 10th, a revised version was loaded onto the website, on the Supreme Court website, and this time it said that the presence of the alleged contemner is not dispensed with. The introduction of the word "not" was the difference. Now it clarified that Anil Ambani's presence is required at the date of the next hearing. Now, just to set the record straight, Anil Ambani did appear on February 12th and 13th on both the days of the hearing, but this is one development that, in fact, both Justice Nariman as well as Justice Gogoi have taken very strong exception to. Justice Gogoi has gone a step further and dispatched the 2 court staff members with respect to this particular development, but indeed some very serious questions being raised on possible tampering of orders of the highest court of the country. Let's, in fact, with that, continue with developments coming in from the Supreme Court. It's a major setback that has come in for the Delhi Chief Minister Arvind Kejriwal, as Apex Court today ruled in favour of the Lieutenant Governor Anil Baijal in 4 of the 6 contentious issues. The court said that the Anti-Corruption Bureau comes under the purview of the centre and not the Delhi government. This was one of the key, most contentious issues in the tussle for power between the Delhi government as well as the centre. And so does the power to order investigations against corrupt officers in the capital. That too rests with the centre and not the Delhi government. But the power to appoint a public prosecutor, the electricity board and the revision of agricultural land rates lies with the Delhi government. Supreme Court also said that left the issue, however, on who can transfer officers' post in Delhi to a higher bench. So a larger bench will now decide on the powers of transfer. So a bit of a setback coming in. Arvind Kejriwal calling it an order against democracy. With that, let's slip into a very short break. But coming up on the other side, CEOs from India and United States held a bilateral talk in the national capital, discussed ways to enhance trade and investments. Special discussion on challenges and opportunities after this short break.
Ignition sequence start. 5, 4, 3, 2, 1.
Oxenberg, make your move. Get your kitchen to the next level of luxury with Architect drawers. Hetic fittings make your furniture work beautifully. German quality you can trust.
Godini. The power of presence. Godini, Italy.
India and the United States today held commercial dialogue focusing on trade and investments. US Commerce Secretary Wilbur Ross attended the event via video conferencing, while Commerce Minister Suresh Prabhu led the Indian side. My colleague Parikshit Luthra is here with an expert panel to discuss the challenges and opportunities.
India and United States today held the Indo-US commercial dialogue that focused on providing a more enabling work environment to companies of both countries. CEOs of both countries identified areas of cooperation including energy, water, environment, information and communication technology, emerging technologies, digital infrastructure, promoting small businesses and manufacturing. US also decided to hold a trade winds event in India in May in order to promote SMEs. It also seems that the impact of talks this time was slightly muted in the absence of US Commerce Secretary Wilbur Ross, who could not make it to the talks due to bad weather back home. After a day of talks, several contentious issues remain, including US tariffs on steel and aluminium, possible withdrawal of GSP benefits for $5.6 billion worth of Indian exports. US, on the other hand, has been upset over new FDI guidelines and data localization norms. Also, no word on when the two sides would finally sign a trade package. Let's take this forward with our guest this evening. We are joined by Martin Howell, South Asia Bureau Chief at Reuters. Kamal Sibal, former Foreign Secretary, will be with us. Aman Thakur, Research Associate at CSIS, is also with us. Martin, I'd just like to begin with you. Yesterday, we got information that Wilbur Ross will not be able to make it for talks. His visit will have to be scrapped because of bad weather back home. Do you think there's more to it than meets the eye?
Obviously, there were conspiracy theories to start with, that this was deliberate. But I think it really was genuine. He really was on the plane. And the weather has been, extraordinarily bad in the US. So I think we should take it at face value.
We should take it at face value. But Ambassador Kamal Sibal, I'd like to come to you. If I look at this press release from the Ministry of Commerce, I don't see too many takeaways. No word on the trade package, no word on all those contentious issues, no agreements as such. Why did the talks happen in this fashion? Do you think the absence of Wilbur Ross somehow muted the impact?
Well, I think it did. If Wilbur Ross had been here, there would have been more substantive conversation with our Commerce Minister and others, and some of the contentious issues which you outlined in your comments would have been addressed, not necessarily in terms of finding solutions, but at least in clearing the atmosphere and improving the understandings between the two sides. But nevertheless, my own understanding, and I was just now somewhere where the Commerce Minister was there and the American side was there and the CEOs were there. And the feedback that I got was that actually the atmosphere was positive. and they didn't want the American side didn't want to raise any of the difficult issues at this stage. I think they'll take them up after the elections. So they wanted to actually look at what are the opportunities that exist and focused on those. So to that extent, the atmosphere was good. But behind the scenes, there are these American complaints about some of the issues which you have mentioned, on which actually there was no forward movement.
No forward movement. And I think Ambassador Kenneth just, while speaking to the press, there was an off-camera briefing. He said that these are issues, these are contentious issues, but they are discussed at another level. They were not discussed in the commercial dialogue. Aman, I'd like to get you in at this stage. There have been a lot of reports about how the US wants a clear roadmap from India on reducing that $22 billion trade deficit, and post the FDI guidelines and data localization norms, it seems that Washington may be wanting to turn the screws on India. Is that the sense you get in Washington?
Yeah, I mean, obviously from the policy front, there's been so much of discussion and sort of tension in the discussion. But if you look at the real numbers and actual trade, there's actually good news on that front. So in terms of U.S.-India goods trade going up at about 16.7%, and U.S. exports to India actually going at a faster rate. If you look at U.S. exports to India growing at 28.6% year on year, versus Indian exports to the U.S., which are just at 10.9%. So you are seeing that the main issue, which is sort of deficit reduction, that's the trade deficit. That's been something that bilaterally has been happening. U.S. exports to India are growing faster than Indian exports to the U.S. And so from an actual trade numbers perspective, that there is forward momentum there. But on the policy front, these issues, like you mentioned, data localization, the FDI rules, the revocation of GSP, these are all issues that have cropped up and sort of been going in an opposite direction where the numbers are telling us they should be going.
That's right. And this is the GSP benefits issue is one of the most contentious points. And I'd like to get in Martin here. Martin, Reuters had actually broken that story about the possibility of withdrawal of GSP benefits for India worth 5.6 billion worth of Indian exports. Why do you think that is likely to happen? When we asked our sources in the Commerce Ministry, they said that there is no formal communication, but there were also other sources who said that this is being discussed at another level.
I mean, the indications we have been getting are that very much it's being discussed, and that what happened with Amazon and Walmart, what happened with MasterCard and Visa, and what's happened with some of what's been going on with steel, Trump's comments about Harley and whiskey in the past. I mean, there is a bit of a build-up there of issues, and the administration may want to send India a message.
Aman, we have been talking about how India has been making that effort to reduce the trade deficit. And today, several CEOs pointed out aerospace, oil and gas as possible and potential areas of cooperation. And they felt that these two areas will reduce the trade deficit in the coming years. What do you feel about this and other areas of cooperation?
Well, oil and gas is definitely one place where, the Indian side, especially, this is something the government has taken a step in by increasing imports of U.S. oil and natural gas and sort of making a specific decision that they're going to source from the United States. I think that's definitely been seen as something that is aimed towards addressing these claims of, the high sort of trade deficit that the Trump administration sees. And a deliberate step to try and, appeal to the United States is saying, look, we are taking steps in favor of doing this. And the same thing with aerospace. Obviously, you see, the aviation market in India growing so fast, both on the civilian side as well as the idea that we could source more airplanes for the military. That, too, is seen as an opportunity for the United States. So, I agree with that. But obviously, the big one here is oil and gas, because that's something that the government can take a decision on. Private sector can join on, but the government also is a key player on this. And that's a pretty big signal from the Indian government that, look, we hear your concerns, and this is an area that we know is important to you, and we can increase our imports of oil and gas from the United States at the same time as reducing the trade deficit, because that will bring that down.
Thanks very much, Martin. Thanks very much, Kamal Sibal, and thank you very much, Aman Thakkar, for joining us. Earlier today, I was tracking the meeting of the CEOs, the Indo-US CEOs and the commercial dialogue. And I caught up with James Tyslet of American Tower Corporation, who is also the co-chair of the Indo-US CEO Forum. Here's an excerpt of that interaction.
The key takeaways from the CEOs Forum.
I would say, first of all, both from the government and the company's points of view, very collaborative, very constructive. We have a 2-year program that we're intending to put in place. And the goal really at the end of the day is to improve jobs and improve the conditions and the economies of both countries jointly.
Have both sides, have CEOs from both countries been able to identify areas which we can use to reduce the trade deficit?
Yes, actually, so there'll be some natural updraft from aerospace industry. Commercial aerospace sales to India will probably go up from the U.S. dramatically. Also in oil and gas, so that will naturally move up. And then some of the industry groups that we have in place now, manufacturing, ICT, etc., are going to explore ways where we can improve trade and increase the total and also even up the proportions a little bit better.
As the government prepares to provide some relief to startup community, sources say that the CBDT will not go soft on startups that have accommodated unexplained money. Now, the department will soon come out with its clarifications on Section 56 and Section 68 of the Income Tax Act. What should the startups expect? Well, Timsy Jaipuria is joining us with more on that. Timsy, the tax department is clearly rolling up its sleeves. Should we expect the taxman to take a tough stance from here? Timsy.
Well, that's right. What we understand from sources, the fact that even as CBDT and DIPP are planning to come up with separate notifications to give relief to startups, CBDT is also working on a clarification to put forward for entire corporate sector, for startups as well, a clarification which is necessary for Section 68. Now, CBDT clarification will actually try and speak that the taxman will not go easy on startups that have accommodated unexplained cash, and taking the shield of Section 56 is not what government wants. Government is very clear that Section 68 works separately than Section 56 and it is not applicable across the sector, that is startups, any other entities, any other company, etc., who have accommodated unexplained money. Now, under Section 68, it is the onus of the taxpayer to identify the bona fide investor who they want an explanation about, is what CBDT is looking at in the clarification. CBDT has identified over 24 of companies which are startups and have accommodated unexplained cash. However, CBDT wants to go slow when it comes to taking any coercive action against these startups, and they want that first department will issue clarifications and only after that they would want the assessing officers to go ahead as per the instructions in those two clarifications. So very clearly, unexplained money cannot be dispensed with, but yes, a relief to genuine startups is definitely in the offing. Back to you.
All right, so expect a tough stance from the taxman for any unexplained money. Timsy, thank you very much for joining in with that story. Let's bring you the latest from the auto sector then. Mahindra & Mahindra has launched its highly anticipated compact SUV, the XUV 300 today. Prices for the car start at 7.9 lakh rupees, which puts it directly against the Maruti Vitara Brezza and the Tata Nexon. Speaking at the launch, Mahindra Group Chairman Anand Mahindra said the Indian customer is looking for cars that are bigger with a better driving experience, and that's where the company's new offering hits a sweet spot. Kevin Lee caught up with the Managing Director Pawan Goenka and asked him about the company's product pipeline and growth forecast going forward.
To make 3 new product launches in a year for any auto company is a fairly trying times. This segment that this vehicle is in, compact UV segment, is 50% of the UV overall. And the Marazzo segment is only about 20% of UV, so it's natural to expect that this will be higher of the 3 shares. Yes, we're working on AMT that will be launched in few months. We don't have a precise time right now. It's just going to the final development sign-off, and then few months we'll launch it.
Right, so some aggressive pricing there by Mahindra. The XUV 300 starting at 7.9 lakh rupees ex-showroom. But let's stay with the auto space. From the 4-wheeler space to the 2-wheeler segment, Triumph India has launched 2 new models from its modern classic Bonville range today. The Street Twin has been launched at a price of 7.45 lakh rupees ex-showroom India, and the Street Scrambler will be available from 8,55,000 rupees. Both bikes are powered by a 900cc parallel twin engine making 65 PS of power. CNBC TV 18's Areeb Sherwani caught up with Shoaib Farooq, General Manager at Triumph India, and asked him about the timeline for the company's first offering with Bajaj Auto, as well as plans to import bikes as CBUs from Thailand. Listen in.
The product pipeline coming in for 2019, do you see that portfolio also coming in via the CBU route through the FTA with Thailand?
I think if I remember correctly, I think most of them would be bigger motorcycles, which anyways we tend to bring in as CBUs. So yes, I mean the answer to your question is that yes, we are looking at FTA also as an option for some of the bikes which we plan to launch. But you never know. I mean that's what I said. We enjoy that flexibility. The moment there are some corrections in the duty structure, we would be very quick in adjusting.
So plans could change. Now coming to your partnership with Bajaj Auto, what is the timeline like? When are we expected to see the first product come out of the Bajaj Auto Triumph partnership, and what kind of a product can we expect?
So you would know that it's something which we all are looking forward to, and there's kind of a delay which has happened, but I can only speak to the extent whatever is available in the public domain right now, and from whatever we all understand. I think both the companies are getting together in a big way and making a headway in terms of the product, which is very positive. I'm getting very positive vibes from whenever I am speaking to somebody, I get these positive vibes. In fact, Rajiv Bajaj himself in the last press conference, he mentioned that he's very happy with the product. So I think that part is really coming together well and fast, and I'm sure it should not miss the timelines initially.
So at what stage would the product be right now? Is it still in development stages, or are we going to see a finished product soon?
I'm assuming at this point it would be in development stage, but basic designing and all that should be taking shape and form right now. So that part as well, I think it's just a matter of the commercial agreement going through, which I think is going to happen pretty soon. So both the organizations are working very closely, and it's just a matter of time that we have more specifics in terms of timelines, what product, what engine capacity, what price. I think that's going to come together as soon as we are there to announce.
It's been a week since Tamil Nadu unveiled its solar policy for 2019. The policy is quite ambitious. It aims at enabling the installation of 9,000 megawatts of solar capacity across the state by 2023. But CNBC TV 18's Jude Sanith is reporting that implementing the policy will not be a walk in the park. Take a look.
9,000 megawatts of solar power in 5 years. It sounds great on paper, but there's one big problem. The Tamil Nadu government's plan is to get more home and office owners to build solar panels on their rooftops, thereby accounting for around 40% of the total power generation target. But a decently sized factory would probably fall under the high tension category, which is not covered under the state government's solar policy, meaning there are no incentives to coax such factories to play ball.
The policy doesn't include HT consumers, which means scaling up, scaling up with small, medium enterprises would make it challenging. So you would only be focused on smaller individuals.
Another challenge is that the state government has not had much success in implementing uniform net metering for rooftop solar panels already in existence. Experts say fixing just these two problems would move the needle a long way in adding the required 6,800 megawatts of power capacity over the next 5 years. That's 1,400 megawatts per year in new capacity.
We did a quick back of the envelope calculation. If we do rooftop solar in Chennai alone, we can have 1,500 megawatts of solar coming from the rooftops in Chennai alone with this tweaking of policy.
One factor that works in the state's favor is the decision to allow for single window approvals for manufacturing projects involving solar equipment and exempting the consumer category from electricity tax for 2 years. While experts say Tamil Nadu's target of 9,000 megawatts of installed solar capacity by 2023 is achievable, another challenge is that of tariffs. At present, reverse bidding ensures that buyers pay extremely low solar tariffs, a factor that could prove unviable to solar producers and sellers in the long run.
One of the suggestions that we were discussing just a few days ago is that ignore the lowest quote, ignore the highest quote, take the average of the quotes in between, and so that should be a price discovery mechanism where it makes it sustainable for anybody investing.
But all these suggestions may not be taken on board immediately with elections fast approaching. For now, the state government is taking the project and scheme route towards boosting solar capacity. This includes investing 1,500 crore rupees in floating solar projects and providing 2,000 solar pump sets to the state's farmers. In Chennai, Jude Sanith.
All right, Jude Sanith, they're reporting on the many challenges with the implementation of Tamil Nadu's solar policy. Now, even as the controversy over the purchase of Rafale aircraft rages on, the Indian Air Force is processing an RFI on procuring 110 fighter planes. Swedish Defence Major Saab is one of the bidders for this program. The company's head of Indian campaign spoke to Rituparna Bhuya on the status of the proposed defence deals, and he also talked about the need to tweak India's FDI rules to ensure that there is a full transfer of technology and source code of the Gripen fighter.
Right now, we have responded to the RFI. We responded to the RFI back in April, back in July. We had the RFI in April, and right now, to the best of my understanding, the Indian Air Force is evaluating the responses, and they are working on setting the requirements for the next formal step in the process.
The next formal step will be testing.
Well, I think, to the best of my knowledge, if you follow the SP policy, there is an EOI that is the next step. And then testing and so forth will follow on later.
Right.
Yeah.
We also understand that there was a requirement for Navy also as far as aircrafts are concerned, and Saab has been offering its naval version of the Gripen. On what is the current status of that particular program?
We haven't had so much interaction on the naval version lately, and one of the reasons is probably that we have a fully developed concept, but we don't have a product off the shelf, and the request as such was asked for a product off the shelf, and that leaves essentially Rafale and Boeing F-18 as the contenders. If this takes another time plan, if this comes after the Air Force deal, then I'm sure that we could provide an excellent Make in India solution for the Gripen Maritime. We could also actually really do a lot of the development on site in India.
Your proposal to the Indian government says that you are willing to provide the technology, the source code, basically almost getting the entire, not only the entire supply chain and for the Gripen, not only the assembly plant, but also transferring the technology and the source codes. But the current FDI policy that exists, are you comfortable in giving source codes, in giving technology, in transferring technology to India with the current available FDI policy on defense?
I think the current policy of FDI is probably relevant, but I think that to warrant success in a complicated program like a fighter program, you could find another solution where you allow us to have a higher control when we enter into the program, and then gradually reduce that control as the program is accomplished. Because in the end, we will have to take liabilities on what comes out. It's always easy to take liability on the product itself, because that's our design. But you also have to take liability on the workmanship. And that might be a little bit complicated if you are not in control.
There you have it, Saab putting its best foot forward, pitching the Saab Gripen. With that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. Have a good night.